Hey, what's up, guys? Houston here. Look, if you're trying to go from getting these low limit credit cards from 500 to 1,000 to $2,000 credit limits, there's five things that you have to do. Okay, and I'm gonna tell you what that is. But if you do those five things, you go from this 500 to 1,000 to 2,000, you'll start getting higher limits from 25,000, 35,000, up to $65,000 limits. All right. Now, here's one of the things that you have to really understand. These credit builder cards, okay? These credit builder cards are not your friend, okay? And I'm going to explain to you because they are bad credit builder cards. You're thinking like, well, don't they help you build your credit? Yes, they do. They do help you build your credit, but here's the problem. All right, let's look at Chime. So with Chime, okay, they give you this card, but you have to have a checking account, right? And so it doesn't charge you any fees. It doesn't give you a credit check. There's no interest. They don't give you any rewards on it. Now, the reason most people end up with this Chime card is because they're in ChexSystems or they're in early warning systems. Put it in the comments if you have a Chime card and if that's the reason why. Okay. Now, one of the things about Chime card, it would allow people to get paid earlier, right? Faster. All right. Now, there's nothing wrong with everybody wants their money much faster. Okay. However, when it comes to trying to build credit and get higher limits, this type of card will punish you. Now, you also have the self card, the secured self visa. This type of card on your credit file will also punish you. And as you can see here, you pay $25 a year for it, okay? And they do offer an unsecured card, but you're going to have to get that with a credit check. The interest rate goes up to 28.24. All right, there's no rewards on this here card, okay? Now, they do have an annual fee, right? Look at that. 35. Now, let's look at Kikoff. Everybody loves the Kickoff card, right? But they do charge monthly fees. You see $5 and you see $20 to $35. Again, a lot of people, they're thinking, well, I'm building my credit. Yes, you are building your credit. But please understand, these here type of cards you're using, they are subprime, okay? And so when you have a lot of subprime cards, what it is with the banks and credit unions, they end up making it more challenging for you to get higher limits. Okay. Now you have Ava. Okay. And so with Ava, they charge up to $72 a year. All right. Now, again, when you're down in the dumps, you coming out of a bankruptcy or something like that, there's nothing wrong with trying to get reestablished. However, I'm telling you, when you're trying to get large amounts of funding, these are the type of cards that's really going to help you. And yes, this is what those type of cards will do. It will help you get in the 700s. Okay. Some people I've seen, because they only had one and two trade lines, they've been able to get into the 800s. But there's a problem because when you have like a few of these cards, like less than four cards and stuff on your file, now you still have a thin credit file. Okay. And that's also going to create a challenge for you. Now, here's my secret. All right, so you understand. I would join a credit union. Okay, and there's a reason why I'm telling you to join a credit union. And we're going to break that down. First, understanding that there's five things. You want high limit credit cards? There's five things that you need to know about: the relationship, the income, the age of the credit file, your debt to income ratio, and the type of cards, okay, that you're choosing. Now, let's talk about the relationship. So, with most credit unions, not only do you have to join, when you're trying to get high limit credit cards, the thing about it, they want you to at least have anywhere from 90 days up to a year with them before they start giving you high limit credit cards, unless you already have a strong credit file. So that's something you need to know about. Number two is the income. Okay. Now, when it comes to the income, they look more or less at the household income and the expenses. So if your wife is working, you're working, and you have pair your income, that's your household income. Okay. Now, also looking at in terms of how much you pay for rent or your mortgage. So if your spouse is working, you're working, you're splitting the rent, right? So then you put down the portion that you actually pay. So if it's 1,500, you are actually only paying 750. Am I not correct? Okay, so you're paying only half of it. So that's the reason you have to make sure that you can have a high household income. Say that you have $85,000 household income, hint, hint. Um, and then your regular rent is 1,500. You're only paying, you're only paying half of that, which is 750, because you want your rent payments to do not go over 20%. Okay, between 15 to 20%. Hint, hint. The reason is because it's going to put you in a better position. Now, talking about the age of the credit file. All right. Now, with a lot of credit unions, sometimes they it depends on the type of product. But when it comes to credit cards and stuff like that, again, the relationship, but like with your traditional banks and stuff, sometimes for them to feel comfortable giving you a high limit credit card, they want you to have at least 12 months up to 2 years old on a credit file. All right. Like I said, with credit unions, they have a little more flexibility because you are actually the member of the credit union. So you're not looking at it like a traditional bank, okay? Especially when trying to get high limit credit cards and you're starting to build out your credit file. So you don't have to have that 24 months or that 2 year um, file in order to get high limit credit cards with the credit unions, okay? Now, your DTI. Now, this does matter. Your DTI, usually with credit unions, they max out at about 60%. And again, it also depends on how many products you have with them. So if you have like direct deposit, a checking account, a savings account, maybe a money market, a CD, and a business account, okay? So it all depends on how many products you have with them. But most of the time, they will max you out. If you have over 60% DTI, then this can actually hold you back. All right. Now, the fifth thing is the type of credit cards. A lot of people don't know this secret. Okay. When you're trying to get high limit credit cards, you always want to look for a Visa signature card, a Visa Infinite card, or World MasterCard, World Elite MasterCard, or World MasterCard. Okay, so you want to choose from those four categories. Now, with some credit unions, they may only offer a platinum card. Okay, and so with their platinum card, usually they focus more on the interest rate. So you're trying to get a 0% interest rate. Usually your platinum cards are the ones that usually are going to focus on that. All right. Now, here's where the change is with the credit unions. It's better to go with the credit unions. And the reason is like with credit unions, their situation is that not only once you are in their database, okay, and you have multiple accounts with them, when you start applying for a regular credit card, you're able to use that same hard inquiry to get a car loan, a line of credit, and a personal loan. Okay, so you're able to use one inquiry to get multiple products with them. Now, I just brought some credit cards up to give you an example of why you should spread yourself out when applying for credit cards. Okay, so not only because if you apply for too many financial institutions, you can end up in check systems, and a lot of other banks will start denying you because of that. One other secret I want to tell you all: sometimes when you be applying for these financial institutions and they'll let you in, sometimes they'll go back and they'll look at your LexisNexis, okay, and they'll see not only they may not look at your check systems or early warning system. They may go back and look at your LexisNexis and see what type of account you applied for as well. As a matter of fact, Credit Karma is notorious for putting a lot of inquiries on your LexisNexis because they're pulling this data when they're giving you these pre-approvals and stuff like that. Because excuse me, when they're doing these pre-approvals and stuff for like different credit cards, they say, "Hey, you approved for this here." They report that stuff to LexisNexis, and they can mess up your file because they may pull in old addresses and old names, and a lot of people are not even aware of that. That being said, starting out with a credit union, you start with the secured cards, okay? And so by you starting with the secured card, like we have the USC card, the DCU, the State Department, and we have the Navy Federal. Okay, so you want to spread those inquiries out. So this is an Experian pool, all right, on this USC. DCU is going to give you an Equifax. It'll give you an Equifax Mortgage 5. State Department is going to give you a Mortgage 2. Okay, Experian. Navy Federal, they're going to use TransUnion FICO 9. All right. Now, this is to help you start rebuilding your credit with them. Now, I want to share with you something else. And that's in terms of when you're applying for credit cards, you want to go for the most flexible cards. I call them the low hanging fruits, all right, that you're trying to get high limits for. Now, the reason why I'm telling you this is because if you go for the low hanging fruit, cards, you not only are you going to get higher limits, but like I said, you'll be able to, you'll be able to double dip with that hard inquiry. So, like, this is a low hanging fruit. This is Tilt, okay? And so with Tilt, they are a Vantage 4, Experian Vantage 4, okay? Then you have BCU, Baxter Credit Union. They are a TransUnion Vantage, all right? Then you have Veridian. They are a TransUnion 3 Vantage. BCU is a TransUnion 3 Vantage as well. Veridian is a TransUnion 3 Vantage. NASA is an Experian, okay? They are an Experian Vantage 4. And then you have Robert Brooks Federal Credit Union, okay? And they are an Experian Vantage 4, okay? The reason you want these Vantage because you can have authorized users, you can have rental payment history on there, you can have subscriptions, all right, and you can have utilities on your credit profile, all right. And one of the best things about it, especially with the Vantage 4 credit unions now, you can have multiple inquiries. So with these credit unions, you can usually have a higher amount of inquiry. Usually, I tell you with financial institutions like the banks and stuff, if you have over 6 to 8, you're in the danger zone. However, with these type of VantageScore credit unions, they're not focused on the inquiries. They will let you slide. So, like you have bad credit and you go shopping for a car or something like that, then what happens? You'll get a whole lot of inquiries and stuff. Well, with the Vantage 3 and the Vantage 4, they more likely won't penalize you for that. Okay. So that's the reason why you want to start with these cards. All right. So I hope this video helps you. If you have any question about business credit funding, personal credit funding, removing negative items off the credit, click the link in the description, schedule a one-on-one consultation. Thank you.